Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Thursday, August 5th, 2010. This morning we're talking about record low rates persist, and we're talking about that in the both the Eurozone and in the UK, and I'm going to get to that in a minute, but first I wanted to show you what happens when sometimes you get some ugly unemployment reports that happen around the globe. And last night in New Zealand, they came out with their unemployment figures, which came in worse than expected. They were expecting to have that the rate was going to go up slightly to 6.2%, but it went up much higher to 6.8%. As you can see right here, we're looking at the 15-minute charts. Right when this news came out, you can see the sell-off, just boom, boom, boom. That looks like it's roughly 75 to 50, roughly 75 pips happening right in there in a matter of the course of a couple of hours. So that's what we're kind of looking at, and you can see how this can just happen just right here. Here it is on the 5-minute chart. Just a boom, just a quick sell-off, and then further selling to complement the rest of the day. So that's what happened with the Kiwi last night. But I want to turn our attention here to the Euro. Okay, now the Eurozone, they came in, left rates unchanged at 1%, but they had good comments from the ECB saying, hey, things are starting to look up here, and we're starting to get some good data coming in. There was some German factory orders data that came in better than expected. So, I mentioned this a while ago, that a lower euro was going to be good for the economies of Europe, and all they had to do was make sure that they didn't have a structural collapse, which they appear to have avoided. So, the prospects in the Eurozone look pretty good. Now, also contributing to Euro strength is anti-dollar sentiment this morning. All right, why do we have anti-dollar sentiment? Well, you can see right here at about 8:30 when we get the initial jobless claims report. Now, here in the U.S., the initial jobless claims came in at 479,000 versus an expectation of 455,000, which is basically a 3-month high. So, that's not a good sign for the employment picture here in the U.S. Now, tomorrow we're going to get the non-farm payrolls report, which is also expected to show a loss of jobs and an uptick in the unemployment rate from 9.5 to 9.6%. If numbers should come in worse than that, then we could see some major risk aversion. So that's what we saw this morning, just looking at the euro. Okay, euro gets a bounce from initial jobless claims, and then you can see right here the market starts to realize, hey, maybe we should start to move towards a little bit more normalized risk aversion, so the euro's giving back some of its gains. Just a quick peek at the pound here. Look at pound dollar. Okay, pound also came in with their interest rate decision. They left rates unchanged as well, left their asset purchase program on the table. So we're going to have to wait and see what the minutes of that meeting look like to see if everybody's on the same page and what's happening. But there are some rumblings that there's beginning to see a little bit of inflation, and if that doesn't come back to within their band of 3%, then there's a possibility that they may have to hike rates sooner than later. So that's what we're looking at with the euro. And just lastly, just want to show you Japanese yen strength right here, 8:30. Initial jobless claims come in, dollar weakness, yen strength. We've got some risk aversion going on, but there's been some concern over the Japanese yen, and particularly this pair, dollar versus yen, that 85 is sort of that line in the sand that people speak about, that's going to be the point at which Japanese were going to intervene. However, I was reading a note from Citigroup this morning that said that they may have a little bit more trouble trying to intervene in the currency this time around. And actually, Finance Minister Noda over in Japan, he's sort of backed away from those comments. So there hasn't been a lot of talk about it. I think the market's sort of been expecting it, but it's going to be more difficult for them to do. So, right now we're going to have to wait for the U.S. non-farm payrolls report tomorrow, which is going to really give us a better idea of the employment picture. Yesterday we had good ADP jobs growth. Today we have bad initial jobless claims. So tomorrow is going to be the rubber match, really going to let us know where we are. But everything I'm hearing is that business is in no rush to hire right now due to the uncertainty coming out of Washington D.C., which is affecting the business climate. I mean, they've got this ridiculous spending going on, which is going to bring about higher taxes. They've got regulation happening, which isn't a bad idea in and of itself, but some of the things that they're proposing and that they put in this bill are really negative for business. All right, and particularly small businesses has been getting hurt the most by that. We also have the expiration of the Bush tax cuts going on. Now that's expected to affect a lot of small businesses, and I don't know if you know this, but small businesses is the major hirer of people here in the U.S. So there's a lot of different things going on in Washington D.C. and this whole big government ideology that sounded so great during the election is really starting to show its true colors and show that it's anti-business. So you got a lot of people that are out of work that are actually depending on the government to make their living in order to get by, and that's really unfortunate. I think it would be real easy for the government to shift these policies, but that would mean that they'd have to give up less control, and I don't think we're going to see that. So keep an eye out for the non-farm payrolls report tomorrow. That's going to be an important figure going into the weekend. And if you are going to trade during that time, you can see how the volatility can occur, how there can be big moves. Looking at that Kiwi number from last night. So if you are going to trade it, don't guess what's going to happen. If wait for a technical setup, see where it's at, or perhaps even wait for the number to come out, see how the market reacts, and then what the second reaction is, and then try and get in on that trend. So that's what we've got for this morning. Good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.